Welcome back to another episode of Key Factors Podcast. I'm your host, Mark Jones, and we are powered by ReviewMyMortgage.com, the largest index of mortgage programs in the nation. And before I introduce my guests, I wanted to just let everybody know that we are officially live. Review My Mortgage, the largest index of mortgage programs in the nation. If you are looking to become a pro lender, please get with us, or you can actually email info@reviewmymortgage.com. So now that we are prepped and ready, I'm going to introduce first Matthew Stansbury. What up, dude?
What's going on, guys? How y'all doing today? Thank you for having me again.
Awesome. And then I've got Dylan Shivley, my favorite podcast guest of all time. Dylan, how you doing, dude?
I'm better now. That was a great introduction.
It's true. It's true.
Thanks,
Dylan's
man.
like, hey, I need a spot to do a podcast. I'm like, let's go. I don't even care. Short notice, let's go.
Yep.
Put it all back together, everybody.
Yeah.
Yeah.
So what's new, Dylan?
A lot, man.
There is a lot.
A lot. I don't know how much we're gonna say on here in regards to what's new there now that that's live.
Everything can be, by all means. I've never really had a filter on this show, and I think people appreciate it because it's actually how we feel, what we're thinking about, what we know, our experience. Matter of fact, I've had people on here that we just go, you know what, you're full of it. Let's stop this. You know,
I like it, man. I gotta watch that one. You have that one up?
No, it didn't make it.
Oh, all right. So I gotta watch that after this.
Yeah. So what's going on?
Man, what isn't going on? So the main purpose of me wanting to get this together was because I've been seeing all the posts, and I'm sure you guys been seeing the posts where like everybody is talking about, oh, now you're gonna get subsidized for having good credit, and you're gonna have to pay more.
Right.
And I read because I like being an actual researcher, not a half-assed researcher. Mm-hmm. So I'm like, hey, before I ever say anything, let me make sure I know what I'm talking about.
Right.
But I could only get so much on an article, right?
Well, let's before you do that, let's tell the folks from your own words who you are, what you do, and why this is so relevant to all of that.
Yeah. So my name's Dylan Shivley, and I own James Warren Group and Dispute Eagle. Both companies are veteran-owned. I was in the Army for 6 years, and our mission here is to help change the lives of everybody that we come across. So everybody has a different reason why they want to leverage credit. And I think a lot of it boils down to education piece, and that is the missing part of it all. Yeah. So I take the mission aspect to educate every person with listening ears that wants to change and do better.
I love that.
Nice.
Love that. And I think that's why you and I relate on so many levels, is the same premise and belief system that we were brought up through, which experience is number one in my corner. They align pretty well.
Yep.
Yeah.
And side note, because it's just one of those trigger words, right? So I listen to a lot of podcasts, or I listen to a lot of people who give classes and things like that. And this has been a consistent message through everything I've seen. I'm a huge fan of receipts, and I'm tired of the people that try to have a platform or do something or try to influence people that, you know, when you ask them a question, you could tell they lack the experience.
Sure.
And that they regurgitate shit
they give
from
you
somebody
a canned
else.
response. Absolutely.
Yeah. Which is why even before I went out and wanted anything to talk about this topic, my first thing was, let me go reach out to the experts that know more than me, so I can do a little bit of learning today too, because I never want to speak on something that I don't fully know about.
I love that.
I love that.
Yep.
So anyway,
yes.
The hot topic, right, is Biden's fucking pissing people off who have bad credit. I've seen so many comments. I've seen some like LOs and realtors saying, I'm going to start a credit repair company and show people how to just ruin it, right? Because then they can avoid that fee.
Right.
And like, of course, there's some jokes behind it too, but there are people that read that take that serious.
Oh, absolutely.
Oh, yeah, for sure.
There are people that are dead serious on, well, fuck my credit. I guess having bad credit, it's finally a good thing. Why am I going to strive to do better?
Right.
And they don't know what all ties in. Like, they're so narrow-minded to one transaction, they don't realize what else credit influences. And that's the part that pisses me off.
Yeah. I mean, and you've got, so what Dylan is talking about is we're seeing all over social media, all over YouTube, even the news has come up with stuff that essentially, because you have good credit, you're going to be dinged. Is it true? To a certain extent, it is. We have loan level pricing adjustments that is how we price a loan. So I'll give you an example. When a borrower calls us and says, hey, what's your rate? Well, borrower, there are so many different factors that play into your rate in addition to your credit score, your down payment, the type of program, what county you're in, your loan amount, so many different factors. So I tell customers, if somebody gives you an interest rate after you saying, what's your rate today or what's the daily rate, run, because they don't know what the hell they're doing. That's not how that works. You can give a range, but you really have to ask way more questions or take an application so you can run it through. What we use is Optimal Blue, and it allows you to price different loan programs with different investors all at one time. So that's just a short, sweet little example of what LLPAs are, which are loan level pricing adjustments. And there are ticks at each credit score, at each loan amount, at each program. I mean, there's so many different things that play into that. And for them to be bringing it to light, I don't know if it does more harm than it does good. So, yeah, I want your take on it. I
More
mean, you've
fear
seen this.
mongering.
Absolutely.
Yeah. Whenever this came out, I told Mark, I need to put stuff out because people are freaking out with this.
Yeah.
I'm just getting calls. And I think a lot of people thought it was going to cost them more on the rate. Like the rate's going to get worse. I'm like,
Well,
no,
it
you're
just
gonna
went
get
into effect yesterday.
Yeah.
I
But,
haven't seen much of a difference.
well, our
Pricing engine?
our pricing agent and our company had already made these adjustments weeks in advance, preparing for this. We already knew the LLPAs were coming out. We knew that, we were going to get these adjustments. So we already made those changes. So we didn't really see it affect our clients. That's just us being proactive.
But go ahead, Dylan.
Yeah.
So, because there's a lot of comments throughout TikTok videos and reels and things like that. So as I'm reading them, like for me, I go directly to the consumer.
Yeah.
Right. So the consumer comes to me and says, Dylan, I don't think I need to have good credit anymore. And I'm like, what the fuck are you talking about?
Hey, powder.
Right. So, they're like, you didn't read the article? Like, it's going to be cheaper for me to buy a home with bad credit. And I'm like, no. Right.
That's not how that works.
And so if we can just debunk and simplify for the consumer base that would be watching, I would say, and correct me if I'm wrong, because again, I'm here to learn.
Yep.
But from my perspective, even if that fee were to incur, right? If they're the 1%, 1.75,
Let's
whatever.
call it 1%,
Right.
just to be simple.
If the 1% were to accrue for that client,
Yep.
even if it was going to cost them a little bit more, wouldn't the rate still be better than somebody with bad credit overall?
Correct.
100%.
Correct.
Right? And that sounds very simple. But
it
it's
is.
more-
It is.
It's
It is
just
that
more-
simple, though.
Yeah, it is. It's more so just a cost, right? They're
Right.
just increasing it just a tad. It's
And-
not like, oh, you're going to have a 600 and somebody with the 700, y'all are going to get the same rate, and the guy with the 700 is going to pay more.
Yeah, that's not the case. And
Right.
I mean, you have a government, many government, VA, FHA,
Yep.
USDA. It doesn't change your rate based on your credit score as much as it does with a conventional loan, which is private money.
Right.
I just see so many people getting the idea or the impression that I don't have to take care of my credit anymore. I just don't. It's like, guys, this is intended for home ownership. It's a very small amount, but you're going to go and jack up your credit. And then therefore your auto loan, which this is not covered in your auto loan, your credit card, your student loans, that new fridge that you have to finance because you weren't prepared, didn't save your money, you're going to pay more on that. So you saving a little bit of money over here on your mortgage just now pushed into all the other expenses that you live.
That's the part right there.
Kapow.
That was the part. So the idea here is to understand what else your credit is influenced by. And it's not just by purchases. But again, just like you said, like, hey, now your car is going to cost you more because you made that decision.
Yeah,
And then the credit cards, the interest rates you're going to pay are going to cost you more for that decision.
absolutely.
If you get a personal loan, it's going to cost you more for that decision. Let's say you close on that home, that little bit of money that you saved. Well, hey, did you know your auto insurance, renter's insurance, and homeowner's insurance is influenced by your credit score? So now you're going to pay more in insurance because you wanted to have shit credit to save that little bit of the fee in the mortgage. Part two of that, right? Because I just want to drop some of the things that your credit.
Sure.
So now part two of it is, isn't it mainly down payment focused too? So I know that the credit score,
Absolutely.
but I feel like nobody's talking about, hey, that's also the 15, 20% down. That's when you start to accrue that fee. So does that mean, because again, I don't know, so I might be wrong. Does that mean if they put no money down or less than that 15%, does that fee not get
So
applied? Or
That's also an additional LLPA, right?
Yes.
That's another pricing adjustment. You get 20%, 15%, 10%. There's adjustments in the cost of the rate.
And what is very odd, but logical, I get it, is historically it's always, if you put more money down, you're going to get a better rate.
right.
It's not necessarily true.
Mm,
Why? We know the reason why. You're financing less money.
right.
So therefore the investor is not
Makes less money.
induced, is not fulfilled, is not
Right.
looking to give any kind of breaks.
right.
But the idea is, let's save up our down payment. I'd rather see somebody have more reserves in the bank than money towards their home, as long as they were comfortable with the payment. Because you've got situations where the consumer has to, let's look at this. If you've got someone that has lower credit, they've got issues that they've had in the past versus somebody that has better credit that is going to now pay this small fee addition. Well, that person that had the bad credit, in essence, also has collections more than likely, also has charge-off accounts more than likely, medical more than likely, late pays more than likely. Those are all things that we have to hit that consumer with debt to income ratio wise. So just because they get a smaller fee for locking in their rate doesn't mean they can buy more.
Right. Yeah. Because, and to attest to that too, so specifically the collections and things like that, I for some reason I always forget it, but isn't it after $2,000 you have to count 5% of the amount?
Correct. And
Right?
that's cumulative. So let's say, example, you've got, and this is great for buyers that are listening, realtors out there that want to know what we know. We're going to pull back the curtain by all means. If you have cumulative $2,000 in collection. So I'll give you an example. We've got $1,000 medical collection, a $1,500 credit card collection, $500 credit card collection, an auto repo that's still a collection and has not converted to a charge-off yet. You now have over $2,000 in collections.
Right.
Now, if you had $900 in collections, and let's say $2,000 in medical collections or $2,000 in charge-offs, we don't have to count the charge-off or medical, so you're still under that little threshold. So, I mean, there's rules behind every single program.
Yeah, like every scenario and
Absolutely.
every
And a lot of people like to put this label over each or over the whole thing, and you just can't do that.
they generalize too much.
Absolutely. Yeah.
And I think that's a huge point, because when it comes to, buying a house, people want to simplify it, and I understand it. But when you put too many blanket statements over something and you generalize it too much, well, when you oversimplify it and you don't include those variables that are super important, well, then what happens? You have a lot of confused buyers that think they can move forward.
Correct.
And then they get these hard pulls. They're trying to figure it out. Then lenders are liars and realtors are liars because they missed the big thing.
Absolutely.
That's like the same thing when people come to me. So they'll say, hey, Dylan, I got a client. They want to buy a home. But, this was the issue. How fast can it be fixed? And I understand the reason behind the question, but the honest answer is there's so many variables.
Absolutely.
Right?
And,
So,
and
like-
that is, I tell borrowers, realtors, anybody that will ask a silly hypothetical question, I don't do hypothetical.
Right.
It's gotten me in trouble too many times
Yep.
where a borrower says, but you said,
Right.
whoa.
Right.
I don't say anymore. I show you after you complete the application,
Right.
after we receive your documents and we review all those with you, because
Right.
I'm not doing this. Well, here's my scenario.
Yeah, it doesn't
Because
matter.
as soon as I pull credit, that scenario is not the real scenario.
Exactly.
Never.
Never.
I feel like a really good shirt would be like no prequels. Like, you know what I mean? Like,
I agree with that.
That's a
right.
good
So,
one.
but again, it's all an effort to actually take care of the client. So anybody that's listening to this, please understand, nobody's like nitpicking their business or saying, I want to cherry pick this only situation.
Not at all.
We want to help everybody, but when you really know what you're doing, you understand that there's too many variables that if you give a specific answer, you could get yourself in a pinch, and then you're misleading the client. So the ramification of misleading information to have good marketing can cost you a lot of business in the future, rather than trying to get the business now, get the application and figure it out. There's a lot of information that needs to be debunked and a lot of things that, need to be exposed, which is why I wanted to do this specifically on that. So like having good credit is always the win.
Oh,
Having
yeah.
bad credit is never the way to go.
Now, do you think that it has been hyper politicized?
Oh,
yes,
of course.
for sure.
Kind of like
Of
everything
course.
else?
Yeah.
I feel like they're hyper focusing on this so
Think
hard.
about it. Everything is systemized for, man, I got to get like a tinfoil hat for a second. Everything is like super systematized.
JC, pull him out.
Close the room.
Because think that whole like cultural divide, right? So the whole divide and conquer concept,
Yeah.
right? So it's left, right, black, white. Here's whose fault it is. Here's who we all want to hate.
Mm-hmm.
Instead of like, so I'm stealing this because I'm a part of a group, so I don't want to take credit for something I
Sure.
didn't say. But one of the statements of the group that I'm a part of is personal excellence is the ultimate rebellion,
Okay.
right? So
Basically.
and that is going towards like the entire like everything that's happening. So just kind of again generalize it. So meaning get your credit in the best place possible, get yourself in the best physical shape possible, and like if you have a business, go all in and do right by people. Look at the delayed gratification benefits instead of the instant, because personal excellence is the ultimate rebellion to everything that gets jammed down our throats of whose fault it is and blame this person. And you see what I'm saying?
Absolutely
Yeah.
love that. Yeah, that's a great concept. I mean, in essence, you are correct. Your group, whoever came up with that, is correct in the sense that you've got 99% of the United States that is pissed off at somebody at some. I mean, it's like, why are you so angry?
Yeah.
And typically the response or the answer that someone should say if they had the balls or the goal to say it is go look in the mirror.
Yeah.
I mean, go look in the mirror. And I'm not even just talking from a physical aspect, more so mental, spiritual, all of those things that you're encompassing right now.
Yep. Well, it's how you do one thing is how you do all things, right?
Yeah.
So if you're mad at somebody else, I learned that
Hey,
this.
I don't know. I don't know. That I just went down the rabbit hole of all things.
Well, think about it.
I don't know.
Hey, we could go there.
No, let's not go there.
Quick example.
Yeah.
Right. Just to put it into perspective. So if you walk through here and you notice something on the floor and you don't pick it up,
Yeah.
because we're in the hey, that's somebody else's job, or I pay somebody else to do it. If you don't pick it up, then that means you do the same thing in your business. You don't pay attention to the small details, right? So if you don't pick up the thing here,
So let's stop that right there, because I love just not disagreeing, but giving a different light to it.
no,
Right.
I'm in.
So let's say at one point in time, you were the guy picking up that.
Mm-hmm.
Okay. And then you've elevated your career by working right, by by rebelling against the man.
Yep.
And now you're at the point where you automate, delegate, eliminate things from your process. And if you are truly making sure that you're using every best bit of your time, and this is a small concept on a bigger scale,
Well, I like where this is
do
going.
you have time to stop and pick that up? Now, some can say, well, that's disrespectful, that's rude, it's just picking something up, right? And others may think, yeah, but it took me 10 seconds, 30 seconds to pick it up, take it, put it in the trash in the right place, because I don't do things half-assed. I'd rather just walk over it than do what I am normally going to do with that piece of trash,
Well,
right?
the trash is the metaphor, right?
Correct.
It's not literally a piece of trash. It's something within your business that you need to focus on.
Yes.
So it's like, do I do that? Do I delegate it to somebody else? That's not me right now.
Correct. Because at a certain point, and I encourage every, not necessarily business owner, but anyone that's in sales, anybody that's in customer service, anybody that wants to take ownership in what they do, is to learn every facet of your business. Participate in every facet of your business, because how do you create a team if you've never
played the role? You can't teach if you haven't done.
I agree with that. Yes.
Right.
I mean, same concept of if you want to open a restaurant, you should probably start bussing tables.
Yep.
And then move your way up so that you know that every single inch of this business plan is covered. And I know where money can be stolen here, and I know where this should be there. And you know what? I was the guy stacking the chairs at night. And
So then that brings me to the next part of that, right? So at some point when you're at the place of automating and delegating and telling people, right? So you have to do it so you know when it's going wrong. But now let's say we go back to that piece of trash, right? And we see it and we step over it. But then we go back in our restaurant, let's say, and we see the employee doing that, the person we delegated the task to overstep it. And then we're like, hey, dude, you forgot that piece of trash. And they're going to say, well, I seen you walk over it, so I thought that was okay because you set the standard as the leader, regardless of where you are, right? So
I see that point. I see that point. It's a great point, and it can be seen from two different angles.
Oh, yeah.
I mean, is someone that steps over it and has too much to do a douchebag for doing that? Or does he see time differently than others? Whereas, I mean, I'm the type to pick up the damn trash.
Yeah.
I'm the type that stays after and picks up the trash here.
Right.
But in logic, I'm not going to be mad at that guy that didn't pick up that trash because he's got somebody that's supposed to be doing it. And the person that comes to me and says, well, I saw you didn't do it. Okay, you know what? Here's my phone. Here's my email. Here's this. Here's that. Go. You got me for an hour. Good luck. Good luck to you.
Oh, yeah.
Do you get what I'm saying?
Oh, 100%.
You want to be me? You got to go through the levels, brother.
Right?
There's levels to this.
Yeah. There's totally levels to it. And then, so I started to learn because I used to do the same thing where I'm like, hey, like I'm out here doing this. This is why I can't do that.
Yeah.
And then I realized I'm like,
out here grinding.
I'm like, hey, wait a minute. But if they want to get there, I don't want them to build that mentality either.
Right.
Like once we get to a certain position, you could get humbled really fast and get put back right in that same position.
Agree. I
You
agree
know?
100%.
So
yes.
it's kind of like that concept
You're
of
never too good
to do the
absolute.
right.
Yep.
And again, that's a literal example, but
Now, with that same example, you could be the guy that picks up the trash and says nothing about it. Or you can be the guy that picks up the trash and uses it as an example, as a learning situation to jump somebody's butt.
Yeah.
I mean, there's many different ways to look at it, but I love that metaphor.
So like, see
It
where
is
you
just
can
a
use
metaphor.
it. Like
Yeah.
you can use it in so many different things.
Yeah.
So another one you can say, like, you probably heard the shopping cart thing, right? So
No.
Yeah, I'm like,
oh
nuh-uh.
shit,
We just
All
do
right.
loans.
Yeah.
So when it comes to the shopping cart, right? So you're leaving, you're in a massive rush, right? Let's say you're like 10 minutes behind your meeting and you know that it's far across, there's going to be traffic. So you barely have any time as it is, but you love your wife and your wife said, you got to pick up diapers for the kid.
Okay.
Right. So you stopped at Sam's Club or whatever and you got them, but you're trying to conserve as much time and make up as much time as possible. And as you're going, you load the stuff in the cart or in the car, and then you do something with the cart. You either put it back or you put it next to the other person's car. You find a way to mount it,
Yep.
right?
Yep.
So,
And I see that all the time.
Yeah, I do.
I'm
Right.
the guy
That drives
that
me
walks it
nuts.
all the way back or finds the guy that is walking around to give them to him. But yeah,
and now I want to give you another task on top of that to do, because I
Okay.
started doing a lot of these things for the past probably about year and a half, and I feel like it really switched perspective for things.
Okay.
You take
So-
the cart with you.
Not only do I take mine, but what happens to all the ones along the way on my journey there? Do you leave those because you didn't do that one?
Ooh. I mean, I'm the guy that if it's not going to go out of my way too much, because there is somebody that is supposed to be doing this. If not, we're going to become an automated world, and we already are. So I think people need to stop focusing on bullshit, in my opinion. It's just a couple of moments that it takes you to go little. Is it really extraordinary that you took the carts? Not really, but in this day and age, it is.
And
You're now extraordinary.
It's the concept of like, hey, if I'm going to go out of my way to do something, so let's go like the ramifications of that, right?
Yeah.
Or the compound effect of that. So let's say, hey, there's clearly somebody that's supposed to do that.
Yep.
And they get paid for it. And they probably don't get paid enough. And that person is having a lot of personal issues that they're bringing into work. And we know they're not supposed to do it. You don't know the story of the person,
Sure.
right? But the thing is, you're not doing it for you. You're doing it for the person. And it's not for the acknowledgement of, hey, I did the good thing and I want you to see it. It's, hey, that's that delayed gratification that if I keep doing good things, maybe that dude walks out because he was rushing, because he went to the bathroom and it was too late. He has a story, right?
Yeah.
He comes out and he sees, oh shit, this is done already.
Yeah.
That changes his mood a little bit, which
Absolutely.
then is the compound effect that maybe he starts talking to his coworkers a little bit different that day. And then he goes out of his way to do something different. It's like the buying the food for somebody at
Yeah.
the drive-thru, right? You create the ripple effect of the good deeds.
Yep.
So, like,
I am absolutely that guy that goes to the drive-thru and tries to make the person laugh or smile.
Yep.
Because that will impact the next person and the next
100%.
person and the next person. And
100%.
it's worth more than money.
Yep.
Your attitude, your aura, your demeanor, all of those things can convey with body language.
Yep.
and actions. And I totally get it. Go ahead.
I was also thinking like being in the moment. I'm always one of those that, hey, I'm already late. Might as well do, finish what
Make
I'm
it worth
doing.
it.
Yep. Go put the basket away, go
Yep.
do my thing, and then go on, move on.
Yep.
Yep. So those were just some of the things. I know that kind of went down
That's
a
okay.
side
That's
of this
okay.
thing, but
Yeah.
the way my ADHD is set up, let me.
My thought process was like, dang, if this compound effect, there shouldn't even be a basket holder. There's just gonna be baskets all over the place because somebody else is doing the job.
Everybody else will do it.
Yeah.
Right. So
and just like that, fast forward, and now you've got no checkers at the check line.
Oh.
Yep.
And fast forward just like
They
that.
don't sell bags.
Now,
Still waiting for my W-2 from Walmart.
Hey, just to jump back to the topic,
I
like it.
Totally, thought about this the other day just because it was going haywire. So they said that the cost from, these people that are going to pay more for credit is going to be roughly $40 a month, right?
Yeah, that's exactly
Right?
what they said. Yep.
So take me back a couple months ago. What changed on FHA?
The mortgage insurance reduced from 0.85 per month with less than 5% down to 0.55.
Which
And
saved
then-
them how much?
It saved them a ton.
Like 20 to 40, 20 to
No,
$60?
it was about $60 per month. It depends. I mean,
Yeah.
obviously it's a percentage, so it's based
Oh,
off
I
of the
see where
loan
this is
amount.
going.
So
But-
my thought process went like, dang, did they just Robin Hood us?
Yeah.
Yeah.
Lower it here, put it back over
Yes.
here.
That's exactly what happened.
Free stimulus
I'm like,
money, now
oh,
you're paying for it.
Hey guys, go do this. Like, hey, we're helping the lower credit score, the FHA buyer. We're
Well,
saving you here.
Anybody know the definition of subsidize?
Oh, shit.
It's basically somebody else is paying it.
Mm-hmm.
I was like, hey, they can't just do that, right? No, they're the government. They can't. And then I'm like, oh wait, we're gonna
They
pay
just
for it
did.
over here.
Yep, they
Yep.
just did.
Well, thing is, same thing like the stimulus money.
Yes.
Here's all the free money, but now, look at your taxes.
Everything
and,
else
look at-
goes up. That's exactly right.
Like, it has to come from somewhere, right?
Correct.
So
Yeah.
whether it's right or wrong, indifferent or people's opinions, at the end of the day, you can bitch about whatever's happening, or you can learn the
Just
rules
move
of the
with it.
game and adjust.
Yeah. I agree.
Right? Understand that things are going to change.
Yeah.
So one of the things here in the office is adapt or you'll get left behind.
Yep.
Yeah.
I have I don't know if I created it. Somebody probably said it before, but I've been saying in my classes recently, I'm like, hey, don't get blockbustered. Right. So I made it a verb. So I was teaching an AI class, ChatGPT and things like that.
Yeah.
And I'm just like, hey, like there's a lot of people say, hey, this is going to take my job. And it's like, no, AI is not going to take your job. The realtor using AI is going to take your job.
Correct.
Because when they free up all their time to be more available, to show up on time for listings and things like that, that's going to be the person who takes your job, not AI itself. It's a tool. So I was teaching these classes and I was trying to connect with the older generation that was there that was like, still thinking it was going to take their job.
Sure.
And I'm like, hey,
No, your job, it's going to take.
You're going.
like, hey, remember Blockbuster? And they're like, yeah. And I'm like, and then now Netflix, right? And you know what happened, right? And they're like, yeah. I'm like, hey, and one of the biggest flexes is that Netflix then made a documentary on how they took out Blockbuster, right? So with that, don't get blockbustered. Don't
Right.
let your limited thinking or not wanting to learn in the, can't teach an old dog new tricks mentality. Don't let that stop you from continuing your business. You have to adapt. You have to adjust. You have to learn, or you can retire. And that goes for any age group and anybody.
Absolutely, man. Matter of fact, let's talk about ChatGPT for a minute because this episode, in essence, can be credit updates with mortgage rates and ChatGPT and how it's coming for you. I don't know, but in that aspect, I think some jobs, so to speak, may be replaced.
Sure.
Very minimal, in my opinion, but I do believe that the value at which some jobs are currently being paid is going to dramatically shrink. And I'll give you an example. We used to pay anywhere from $60 to $100 per blog post for our separate website, Review My Mortgage. Now,
You remember that time?
I mean, I'm telling you, it's literally able to fire off unique and very great blogs that we used to pay for that for. Now, does that mean that person that writes those blogs is going to lose their job? No, they just have to come to terms with people aren't going to be paying no $60 for no blog article anymore.
Right.
Yeah.
They may pay 10, so you've got to do double, triple, quadruple the work.
I mean, are they really working? I mean, at that point, it took them 4 hours to write a blog. Now it's all right, 2 minutes.
And I
Right.
can't
Who says they're not using it and recycling the information?
Correct.
Somebody's going to fucking do it.
That's right. That's right.
So,
and I
it's
guess
no
that
different.
was my point, is find a way to plug it into your business to give you back the time.
I think it's going to leverage one of the biggest things that lazy fucking people will pay over the head for.
Yeah.
Convenience.
Absolutely.
Right? So
That's a
what
must.
is like when you get an option that's convenient for you, you're willing to pay a little bit more.
Correct.
Uber Eats, DoorDash,
Amazon.
Mhm.
right? So you're willing to pay for convenience because that part of your brain that is like, hey, I don't want to stress myself out and I don't want to do the work, it's feeding into that.
Absolutely.
So you can use it, or you could be so against it. Oh, I'm not going to use it. I'm not going to use it. Well, now you're going to start paying people the same rates you were always paying them because you didn't take the time to learn how easy it was.
Right.
And the smart ones, are going to say, hey, I know you need speed and you need convenience, which is why I'm going to charge you more for speed and convenience.
Mm-hmm.
And they're getting it done at a fraction of the cost. So the smart ones will have the bigger margin.
Correct.
Find the lazy people and say, do you want this overnight? Do you want this super fast? Do you want it super
Here you go.
easy?
Check this box, pay this extra fee.
Right.
No problem. Boom.
Right.
Probably the person with bad credit.
Right.
The other thing is, so I've been using ChatGPT for some attorney work. We know that it passed the bar.
The bar, yeah.
So
yeah.
by all means, you ask it the right thing, you tell it exactly what you want, it will put it in legal terms for you. Now, it says at the bottom, I'm not a legal attorney, blah, 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 blah.
Yep.
But I sent it to an attorney and said, hey, review this. Does this look good? This is something that an attorney worked up for me. I just wanted to make sure he's doing the right thing.
Mm-hmm.
Yeah, it looks good to me. Like, oh, okay.
Thanks.
Yeah.
Bye-bye.
Yep.
That whole, God, we were paying how much? $1,000 an hour for retainer? No, it was like $300 an hour for retainer. Bye.
Yeah. So think, all the money that you save, you can do so many more things with it.
Sure.
Whether you want to pay your employees more, you want to run some bonuses and incentives. And I mean, that's me, right? So
Right.
From the last time we spoke up until now, right now we're at 48 employees. We're going to creep
awesome.
over 50 probably
Nice.
by next week.
That
We
is
have-
awesome.
So everything I think about is for them, right? It's no longer for me, it's for them.
Right.
So
So now, guys, you're actually hearing from our number one partner with ReviewMyMortgage.com nationally in regards to the credit repair and credit monitoring.
yeah.
Just so you know.
So the thing is, yeah, and that's what I was going to say before. I was like,
There's
are we saying
reasons
those
why.
things?
Yeah, we are absolutely okay to say those things at this point.
Cool.
We
Cool.
have not started opening it up to other lenders
Right.
just yet. We've got 30 more days of testing.
Got it.
But we are in week 3. We're already up to $8,000 users. I mean, it's like, holy cow, it's working again.
Oh, yeah.
So
And it's just the beginning.
yes, yeah.
So with that, everything that I do is I think about the employees, right? Because my life is okay and everything's good. And it switched at a point of like everything that I do, everything that I say, how I carry myself, how I do classes, how I put things out on platforms. It's not about affecting me. It affects the staff, right?
Yeah.
It affects the employees. So anytime I find cost savings, I think, how can I go run something to pay them better? How can I do something to give back to them? And so, no, I don't get to show up in a Lamborghini and I don't get to show up in all those things, but that's okay for me. It's the delayed gratification of like, let me go change their lives first because it's funny. There's a sign and I don't know who it is and maybe they watch this and now they're going to say something, but whatever. I'm helping you. So there's a sign. I think it's a lawyer or something. I don't know. All I know is it's a black background with silver lettering and it says clients first. Like their companies say that clients are first. And that used to always be a thing. But again, here's a different perspective. No, they're not. So employees are first, not your customers. Because who makes happy customers?
Happy
The employees. Right?
Yeah.
So I get your message, but you might want to change that shit and I'll take my fee whenever you see this.
So here's another something to think about, and this is about change and adaptation and things of that nature. And I agree, employees first always, 100%, and the ability to use automation and
Yep.
and I'm kind of plugging the two together.
Yeah.
Is at a certain point, some positions become obsolete because of technology.
Yep.
And our goal as leaders is to continue to educate and elevate our employees to continue to advance so they don't get caught in that situation of, oh, shoot, now what am I going to do? Well, you remember we taught you how to do this. So now you've got to go fail at that until you become the master.
Right.
But it is possible that there are businesses that will run because what's happening, there's going to be less employee-based businesses, in my opinion.
Sure.
And the client, in that case, kind of comes first, right? Because you don't have, and in addition, without the client, you don't have employees. I'm comparing this to the last, let's call it 8 months to a year. In the mortgage business, there's been layoffs like crazy.
Yeah.
Okay. There's no secret about it. You see it everywhere. The margins have shrunk. The rates have gone up. There's less buyers that are willing to pay the higher rates, less sellers willing to put their homes on the market. Thus, it's this vicious cycle that's happening right now. So there's been folks being laid off left and right on the operations side because if you don't have loans, you don't have employees to do those loans. My number one goal, which I can attest 100%, honey, we're almost there, we're almost back, but I took a huge pay cut for the last year. Why? Because I didn't want to lose any employees. I would much rather you stay on board and me take the lumps until I can't than lose an employee and keep what I make and keep what you make. I mean, it's just one of those things that you go people first. I think that should be it, is more so people first.
Yes. So I mean, you pretty much said where I was going. No, you're good. My thing that I was going to say when you start bringing up, hey, layoffs, those are the companies that are losing because not everybody, a mass majority of people are AI'd out, are phoned out, are screened out. Nothing ever beats human communication.
I agree.
So you can lead gen and capture people with AI and save money, yes. But if you get rid of your people, well, who's going to solve the problem when the problem arises?
Right.
Somebody wants to dial a phone number. Somebody wants to be on the phone with somebody. Somebody wants to sit in an office with another person that has compassion and feelings and emotions.
But less and less and less.
Of what?
Of that.
That's what it's been.
And we can thank the pandemic for that because people got too comfortable and did not get out of that mindset, did not get out of that way of life. And now that's why we do Zoom calls.
Yeah, we do Zoom. Like clients don't want to come in.
Yeah, they don't want to come in anymore. And before, I will tell you, before the pandemic, we'd have customers here every day meeting with them, showing them, feeling the documents, showing them the screens, all of that good stuff. And it's like, wow, you really don't want to meet me? You're okay doing this whole, you're buying $400,000 house. No big deal. Okay, great. You're not even going to turn your camera on, huh?
Yeah.
Okay.
That's how it's been. Quote me. It's here.
Yeah.
It's going to shift back.
I hope.
It's going to shift. Watch. I'm
hope.
telling you. It doesn't happen overnight. It's
but
not
going
to happen next year.
Here's something else.
It will shift back.
And I'll use Android as an example.
The superior phone,
you don't go to the Android store and say, hey, you know what, guys? Give me that 2013 model of the Android, please. I'm trying to go back to the old way of doing things. It just doesn't happen. We don't go backwards. We only evolve. There are plenty of people that stay left behind, but for the most part, we evolve as a society. We continue to evolve into a society until we become the aliens that are running the world, or whoever the case. We don't know how. Yeah, we don't know how far it's going to go. But I just have a very strong feeling or belief that we don't go backwards. I mean, we as a society, I think the ones that are going to thrive will take that concept and bring it forward with us.
Yeah.
But I think the masses, the layman, the person that's on their phone TikToking all day, the consumers, being honest, they're not going backwards. It's just strange.
They're not gonna give up anything. I think, and this has been a very common theme of things I've been mentioning in conversations these last 30 days or so, is going from the or mentality to the and mentality, right? So when people hear AI, they think everything has to be technology, right? So it's, I gotta do all of this and stop doing the other thing, or hey, I'm gonna get away from AI and do none of it. I'm gonna do all human interaction, right? It's or. I got to do this or that. I got to make this decision or that one. My opinion is I go with the and mentality, right? So that one word shift makes all the difference. When you hear or, that's scarcity, right? That's reserved.
Right.
When you hear and, that's abundance, right? So there is a fine line between moving forward and still catering to the people that refuse to do so.
I agree.
Regardless of what they're going to do, I want to go to everybody. Right? Because that's how you start impacting on a huge level is you don't say, hey, I'm going to just only do the human to human interaction because I refuse, technology and vice versa.
It limits you.
Right. So like, I want to solve the problem for the masses. Well, I got to adjust and have the flexibility to go for the masses. So I want to cater by having the human to human interaction with people and having the right level of automation and AI and implications in where they're necessary.
I love that.
Yeah.
Right? I mean,
So-
and the concept is fish where the fish are.
Yeah.
Right.
Well, the fish are still there, and there's new fish here.
Yep.
So learn how to start dipping your pole in that pond.
Yeah,
Period.
it's like people that are going out and buying cars. Some people want to go buy through Carvana. They're doing it all online. Like, hey, I got myself the best deal. And then there's the people that I'm going to go to the car dealership and sit there.
I want to negotiate.
Is the car I want to negotiate. And then I'm going to go to the other car dealership and tell them what I got.
That's like my dad.
Yeah,
My dad's
true. And
true.
people, but they still want that interaction and they want to be sold. But then there's the people that, hey, I looked at everything online and went to Carvana and I bought the car I want.
Right.
Yeah.
And good.
And they are good with that decision.
Yeah.
And I think to your point, there are enough people that are consumers that shop different ways.
Of course.
There are.
There's so many different options. And guess what? To shop at anything, you need really good credit.
Because you need to be keeping your cash right now because cash is king. Recession's coming. Don't know when, but it's still, I mean, by all means, Jesus.
Yeah. It's on its way. It's on its way.
So let's sum up this credit debacle because let's make it super clear as far as what's changing, when it's changing, because these changes took place yesterday.
Yeah.
Well,
so like
yesterday
it's
was the first,
already
right?
in effect.
Yeah.
By the time you're watching this and it's edited, we're already a couple days into this.
Correct.
Right?
That's exactly right.
Yeah.
So this is something that they're saying Biden is the one that did. I can't stand when they do that because it's just one man was like, you know what, today I forgot. Oh yeah, that's right. I was gonna
say there's no way he even completed the sentence.
Thank you.
Oh shit, did I say that?
Yeah, it's okay.
All right. I do have a question. I don't want to forget because I forgot it earlier. So we know the VA loan, right? And one of its many benefits is you don't have to have a down payment. And there's no minimum credit score requirement and things like that. So one of my questions was...
People like to throw that there's no credit score requirement.
Even though they
it's
have
true, but what investors
even though they have the layover, right?
Yeah, yes.
So like when you hear this, just because you have a 450 doesn't mean you're getting it. Because any lender you're going to, there's guidelines and there's overlays. Fuck, it's like I'm in lending. Yeah. There's guidelines and overlays, guys. So pretty much what happens is the VA can say there's no minimum credit score requirement. However, the lender you're going to, most are probably going to require at least a 550, 580, sometimes a little bit higher, maybe a little bit lower. But if they have super low requirements, that's one of those situations, like just because you can doesn't mean you should.
I'll agree with that. Yeah.
Right. So, and that's kind of where I step in, I guess, shameless plug, right? But
well, in addition to that, and don't forget your point, but in addition to that, the lower the credit score, the more you're going to have to pay to lock in a rate. That's back to the LLPAs and this whole little idea of, oh, well, it's going to be cheaper for them. Yeah, it's going to be cheaper because they've got to pay quite a bit right now.
Yeah.
Yeah.
So my question is, if somebody is using their VA loan and they're not putting money down and they have pretty decent credit, are they still paying that fee?
I don't believe so.
That's why I wanted to know.
Now, here is something that is nuanced in itself, and it's more so when you go to a lender that says, we don't charge any lender fees, how the hell are they making money then? Okay, so you can say all day long that you're not charging anything or you're not paying more, but let Tom and Gina come right back one after the other, same credit score, same everything. Why don't they have the exact same rate? Right. Well, they don't, because the salesman over here was better because the maybe this loan officer had more education to be able to advise them to put a little bit of money down to lower their funding fee, to go with text vet. I mean, there's so many different nuances
Variables.
to that.
Yeah.
Absolutely. Yeah.
Right.
And for somebody to throw a blanket statement, which is what's happening right now, you're going to pay more because you have better credit. But really?
Yeah, like
it doesn't say more than the person with the 600. It just says more.
Right.
So to give you an example is like, say we have 600 versus 700. This person is not going to pay less money for their rate than the person with 700.
Correct.
Right.
Right. So like the cost, let's just say the LLPA on the back end, this person is paying, they got a negative 2%, right, on their cost. So that's a 98. This person, now with where they're at, instead of at par, now it's like, oh, we're going to hit them with a quarter point.
Right. So they paid 0.25% to lock in that, let's call it 6% even, whereas the lower credit score borrower has to pay 2 points to get to the 6%. But before they had to pay 2.25, 2.5. That's what changed.
Right.
It's not the concept of, you know what, we're going to take from the rich and give to the poor right now.
Yeah, exactly.
I mean, they're always doing that.
Yeah.
So what's new, y'all?
Yeah. And this is, so I guess the ultimate message here is like, don't let these blanket statements that you see everywhere, which is why I wanted to do this, right?
Yes.
I wanted to debunk those things and learn myself, right? So then when I'm having conversations with people, I can come from an actual factual, educated standpoint
Absolutely.
rather than an article. So the overall message is good credit always wins. Don't let this fee stand in the way of you wanting to have better credit, because you're going to cost yourself way more money on everything else that you do.
I agree.
Right? So
thank you for the label of this, the title of this podcast.
Long-term
there we go.
repercussions. Yeah.
Yes.
Yeah, like,
good credit always wins.
it always wins at the end of the day, because your credit score doesn't represent are you approved or not? Your credit score represents your risk level.
Correct.
Right. And so every lender, and that's where those overlays come, they have different tolerances. So the lower the score, the higher the risk. So they're going to charge you more when you're more risky, because they really don't want to take the loan.
Right.
So good credit always wins, because you could pay less for the things that you have to get regardless.
Right.
Right. And so when it comes to getting the loan for the mortgage specifically, it's credit, income, and assets. And with that DTI that you were mentioning earlier, well, the person with bad credit that's trying to avoid the fee, that's now paying higher interest rate in the car, what's usually the biggest holdback from somebody where their DTI is maxed out? A car payment and probably their insurance and some collections. But mainly that car payment is a big deal.
Yeah, because they're toting a 15% interest rate
And to
on it.
piggyback off what you're saying, like credit, good credit is king, right?
Yeah.
If you lower your credit score on a conventional loan, also there's other variables that are going to increase your monthly payment, like mortgage insurance,
Right.
which derives straight from your credit.
Right.
Which that was one more thing. I know I said one thing, but I
Hey, no, it's okay.
Another one.
So another question I had that you just reminded me to ask is, do you think, and maybe this is some conspiracy related or just the way my brain works with numbers, well, notice that the extra fee is really down payment driven, where it's like once you hit that 15 or that 20%, that would eliminate PMI. Now all of a sudden there's a fee. So are they doing that to still make a little money on the people that are trying to avoid PMI?
I can almost guarantee you it is all of this.
Right? It's like, how do we still get paid?
All of this that we're talking about right now, I can almost guarantee you, I haven't dove into the proof and anything like that, but I can almost guarantee you the borrower is not the one benefiting versus the government benefiting. I mean, simply put, same concept with mortgage insurance. We pay mortgage insurance for not putting 20% down.
Right.
That protects who? Not us.
Exactly.
Not
It's that
us.
If you default, then they know they still have equity in the asset to sell it to get their money back.
So what are we doing here?
Right.
You know?
And that's kind of where my thought process went, is like, okay, this is really like, I don't know why people are so focused on the credit score. Focus on what they're doing with the down payment. If they're saying at 20, if you put 20% down, now you're penalized for a fee. I think and obviously I wasn't there, but I think the group circle was like, how do we still get money with people that are not paying? How do we get more? Well, let's charge a little bit of a fee to try to make up some of that money we're missing from PMI.
Right.
Because it's good credit with 20% down targets a specific group of people.
Right.
So yes, they're getting more money from the people that can afford it, which again, I think is total bullshit, but it's a way for them to try to make more money. How do we get a little bit? Because we go from either we're going to make PMI money or we're going to make nothing.
Well,
so how do we get a little bit?
You change the rate. You change the LLPAs. Those affect what end up going to that big investor at the top that buys all the mortgage-backed securities.
Right.
Hello.
Because you make money on the back end too, guys.
A tiny percent of $1 billion, you've got a lot of money.
That's a lot.
Yeah. Which is, why do you think that 40 whatever dollars seems very minimal?
It's minimal, but it's a lot if you look at the masses.
I mean,
that's why well, same concept. When I sold cars, you sell the payment.
Right.
When you sell mortgage, you sell the payment. Why? Mm-hmm. Everything has to do with a monthly because people don't look at the total amount. Same concept with somebody says, well, let me put $20,000 more down. Well, are you really saving by putting that $20,000 down or it being in your pocket? I mean, you've just saved maybe $3 a month.
So check this out. And the numbers, these are probably way smaller than what it actually is. Mm-hmm. But just to make the easy math, if it's $40 a month times, say, 3 million people that have transacted, let's say, that's $120 million a month.
Yes.
Off of $40 a month.
Correct.
That seems like basic math, but somebody just heard that and was like, wait a fucking minute, that is a lot.
That's a lot.
So that's why some of those basics, like, I don't want to like miss out. I like putting those out.
Right.
The small monthly fee doesn't seem like much. But again, you can avoid all this if you understand the things in and outs. If you understand, hey, it's not just credit, it's also the down payment. Right. And then get to thinking, well, why do they want this money? What is this replacing? What is this doing?
Right.
It's creative strategies to figure out how can we increase more money at a small amount that nobody would bitch enough about.
I agree. Well, let's get to wrapping this thing up. Yeah. And I wanted to give each of you a moment to, I don't know, give us a little something. What advice for a buyer having just heard this and maybe they, I don't know, heard it on CNN. They're getting some fake news bullshit. Yeah. What would you tell a borrower right now, given that this just took place yesterday? In our opinion, we haven't seen it change too much. Yep. Yeah. But we also focus on helping the borrower with lower credit scores, the recession-proof business. I mean, at the end of the day, that borrower is not going to be upset at a 6% rate, 7% rate. They just want to be in a home. Right. They want to start building equity for themselves and their family and future generations where the previous generations did not or were not able to do. But now they can, and we want to show them that. So what's something that you would maybe tell some folks?
I would say don't listen to the fear mongering. Get off the news. Get with an expert that can actually show you what is going on in the back end and stop renting.
Yeah. Bottom line. How about you, Dylan?
Here's why I say good credit always wins. In that scenario you just said. So when somebody's trying to build equity, what is a faster way to build equity when you have more going to principal and less going to interest?
It's called kill the P. That's right.
Mm-hmm.
So putting the money down and having the little fee, it is what it is. But if that gets you closer, right, to building more equity right away, also ask yourself, because again, I think of the ramifications and compound effect, like what happens after. So the goal is you want to build equity. Well, you can build it faster when you pay less in interest, right? So good credit is going to win in that aspect. Part two, if you want to borrow that money, because why do you want equity? Just to say you have it, or do you want to use it for something?
Utilize it, as a driver.
If you want to use it, fun fact, the minimum credit score requirement for a HELOC to borrow, because by the way, it's not just free money. You go to the bank and say, hey, I'm here for my money. It's a loan. So the minimum credit score requirement for a HELOC with anybody is always higher than the minimum credit score requirement than any initial loan product to buy the home.
Yes. Why? Because the bank is loaning you funds, and it is secured by the mortgage, but it is sitting behind this thing called a first lien. They're now in second lien position.
Right.
And therefore,
which is a higher risk.
Absolutely. Therefore, and the way that works is, let's say you have hard times, you lose your job, you run out of your reserves, and now you can't pay your mortgage. You do that for 90 to 180 days, they now have to foreclose. When they foreclose, they're then going to go and sell the home to try and recoup some of those funds.
Yep.
Some of those funds are going to go to the first lien, and if there's anything left, then they'll go to the second lien. Typically, there's nothing left.
Yep.
I mean, they're taking the bigger risk.
Oh, yeah. So the reason I say good credit always wins is, one, it lets you to it allows you to get approved, not just get approved, but get a good deal. There's a significant difference. Then if you want to build equity, you could build it faster with a lower rate. And if you refinance the things and understand what credit goes into, if you're paying less for your car, less for your insurance, homeowners, renters, auto insurance, if you're paying less for the things that you're obligated to pay for, and then when you bought the house, if you get asked for a deposit or a down payment to turn on the electric and the water, that's due to your credit. So even that first couple $100, if you can save all of that money, well, what allows you to refi and have money in the bank so you don't have that happen when you can keep more of your money? Everybody's complaining about inflation.
That's right.
The way to battle it is have good credit, have the things that you have to pay for, learn how to pay less for them by leveraging your good credit.
Right.
So you can create a better savings. So then that way you can pay down the home faster to get your equity faster, to do the things you want to do faster, which is why I say credit is always king.
Thus being able to take advantage of recessions versus
going in your turtle shell.
Absolutely. Versus being a participant in the recession.
Recessions create the gap.
Recessions create opportunity.
Or they increase the gap for the
unprepared.
Right.
Unprepared and prepared, period.
Right.
And I think that even if somebody, for example, that loses their job during a recession, well, that could be detrimental to somebody if they don't have savings.
Absolutely.
If they do have savings, hey, the proper amount of savings now gets you to the next job, the next opportunity, and you didn't skip a beat.
Yep.
But you had to have that mindset, you had to have that sacrifice to put that money away, knowing that regardless if it happens or not, I'm going to be prepared.
Exactly. And that's the other, man, I could keep going, but I know we have to wrap up. Guys, I'm just thinking of some of the clients that reach out to us after like when the whole like, hey, you're going to get, your stimulus money. And there was a portion of people that never got it. Well, the people that were able to graduate from our program, when they didn't have the funds, they were able to leverage their credit for a personal loan so they didn't fall behind on their rent or their mortgage.
Yes.
They were able to consolidate things. They were able to use the personal loan to pay off the credit cards, right? That brought their score up. And then they were able to get through the times because they were able to shift and borrow some money.
Correct.
Now, sure, did it cost some interest and things like that?
That's called smart credit.
Right. It's learning how to leverage it. So again, credit always wins. I don't give a shit what you say.
Boom, drop the mic. All right. Well, gentlemen, that was a great discussion there with a lot of tidbits that folks can use to apply to their daily life, from credit, from best practices to what's really going on within our market and the changes that the man is sticking to us, so to speak. And we also gave a couple of tidbits and perspectives on Chat GPT.
Yeah.
By all means, if you
sponsor us,
if you've heard, right. if you've used it, fantastic. Continue to find ways to leverage it. If you have not used it, find a way to start using it. Get with your nephew, your grandkids, whatever, to learn how to use this, because it's not going away. Just like everything, and getting back to the point, I don't think that we go backwards as a society. It's the ones that end up getting left behind that, I don't know, that cause all the ruckus. Because it's like, come on.
Man, I was waiting for one thing. I'm about to do it for you. I'm surprised you didn't say.
Go ahead.
Well, think in all this conversation, what's a great way when somebody's not sure what their scenario would be and they know there's a lot of variables? Where can they go to find out their scenarios?
They can go to reviewmymortgage.com. I totally forgot about that. Yeah, 100%. So if you are out there as a buyer, as a consumer, and you're looking for a self-diagnosis, that's something, reviewmymortgage.com is something that you don't need an actual lender. We've already put all the guidelines behind the scenes into a smart algorithm that once you put your information in there, you're going to be presented with your options. It's up to you to move forward, proceed, ask questions, compare different programs side by side. But you can sign up for your actual free dashboard at shopper.reviewmymortgage.com, or just visit reviewmymortgage.com and just start clicking around. Hopefully you'll enjoy what you like. We're already up to over 8,000 users nationally within the first 3 weeks of launch, and very minimal dollars out of pocket. Our SEO is going nuts. Our value proposition is very strong, and our partnership is even stronger. So that being said, guys, thank you both for joining on this episode. Thanks, and man. You guys out there, we'll catch you on the next one.